Welcome to another episode of Tech Talk, where we discuss tech, data, AI, and innovations. On today's episode, I am thrilled to have someone who is a leader in the payment space. He has 23 global patents and has done groundbreaking initiatives with some of the major giants. Let's welcome Jagdeep on the show. Thank you so much, Jagdeep, for taking out time from your busy schedule and coming to the show.
Appreciate it. Thank you.
Absolutely. To start with, let's talk more about your career. So you have, what I know is you have been in this space, payment space, from last 20 years or even over. So it would be pretty interesting if you can talk a little bit about your career journey.
Sure. Yeah, I mean, I fell into payments. I was a junior in college and I got an internship opportunity to work for Visa. And that's where, like 3 months into my internship, they offered me a full-time role. So that's how I came into payments. So I spent over 2 stints. I spent about 18 years with Visa. Started in testing and then went into system architecture, business leader, and then I finally left Visa being the VP of Innovation and Partnerships. In the middle, I did about 2 years at PayPal, working on off eBay merchant services business. I was with JP Morgan Chase working on Chase for Business and Chase Connect digital product management. And then I went to Salesforce and worked on the financial services cloud partnerships. And last, before going to the bank, I was with NMI, again, doing partnerships for them. And then my last gig was being the EVP at Bank of California, running the payments business. So I built out a merchant services business and then also stood up a commercial credit card with a mobile app and receipts and, spend management type of offering for our commercial clients. So yeah, I mean, it's been 27 years in payments. That started as an internship and now is a lifelong career in working on payments and fintech.
Yeah, that's pretty impressive. And like how you started from payments till you are in payments. So you have seen massive initiatives and groundbreaking things. And if we talk about the payment section of banking or fintech, we have seen that it has evolved a lot from last 2 decades, right? From cash and paper to your online and then contactless and wallet. And now it's more about RTP and buy now, pay later. And a lot of things are happening even from the AI forefront, right? So tell me a couple of factors which you think are responsible for such major shifts.
I think the first, it's just consumer behavior. The consumer expectations are changing, right? And if you go all the way back to 1958, when Bank of America dropped the 60,000 cards in Fresno, right? They were the first sort of unsolicited, unapplied for credit cards that were revolving cards that they dropped and mailed to people, and it stuck, right? And that was a predecessor to Visa being created. So as the consumer behavior changes, as we start adopting things, not just in payments, in our life, we start expecting things to be more seamless and contextual. Right. So payments are the same way. Like I remember we were working on contactless at Visa.
Yeah.
The early days, rest of Europe, and I think this is a perception, or this is what everyone thinks, like US lags in payments, right?
Yeah, that is one of the questions on my agenda to, talk more about why is that so?
Yeah, I mean, even the EMV adoption was late in US, right? The chip cards came late in US, but you have to remember, like, that the telecom infrastructure was so good that every time you swiped a card at a merchant in the US, you got an answer from an issuer online within 2 seconds, right? So there was no need for us to have chip cards because every transaction was always online. And chip card or EMV was a technology that was more meant for sort of bridging the gap where there wasn't an infrastructure. And then suddenly cell phones came along, wireless came along, and countries like India and China, everyone was always online.
Yeah.
So QR payments or optical payments took off in that market because everyone was on screens, and there was no point of sale infrastructure to worry about. In US, you still have merchants that have infrastructure that they've invested in. So making it contactless is easier than trying to make it optical or make QRs happen. So I think every market has its own dynamics that you have to worry about. And then I think US as a regulatory framework does not mandate things, right? We let market drive the adoption. So you're never going to see a UPI type mandate coming from the Reserve Bank of India or PBOC coming and saying everyone has to do it a certain way. You would not have an Aadhaar type KYC infrastructure in US. Like it's up to every bank to decide how you KYC your customer.
Yeah.
So since it's a more market-driven environment and a regulatory framework, US tends to let 1,000 flowers bloom and see which one takes off. Whereas, other sort of more strong, centralized environments tend to go with a mandate approach. And then like RTP today, it's interesting that you would think RTP is new, but you look at the volume or the growth numbers on RTP and it's growing leaps and bounds without any mandates, just because it addresses a market need, right? So yeah, I think it's a great time in fintech because all of these things are happening.
Yeah.
But I have never felt that we're behind.
Yeah. So going back to our previous question, right, that what are the top 3 factors you think are driving these innovations and in the payment? First one, you mentioned that there is a need for consumers, right?
I mean, consumer demand is always number one, right? And second one is there's this technology advancements that's taken place, right? So now cell phones have the chip card already embedded in it. So tokenization enables us to have a token in every device from your watch to your phone, right? And in the future, you might even see it embedded in your car, right? So you'll see a more contextualization of payment taking place.
The tokenization, basically, it's a process of exchanging the token so that
it's replacing replacing the card number, the real card number with a token, right? It's a representation of the card number. So if it gets skimmed or scammed or attack happens, your real number is safe. So your transactions on Apple Pay or Apple Watch are more secure than swiping or dipping or tapping that card. And I think the last one is like, there's a lot more happening on the B2B side, right? So we're used to SWIFT and we're used to paying very high fees for cross-border transactions. And as distributed ledger has come along and has become more stable, again, a technology advancement, that's driving a shift in how cross-border B2B happens, right? So stablecoin and what's happening in that space is giving you a cheaper way to do remittances. So I think consumer behavior, contextualization, and then technology advancement is sort of 3 things.
Thank you so much. So let's talk a little bit about what you have discussed before, that we think that US is a little lagging behind. We are still seeing that the payment mode is card-based, like Visa, MasterCard. And if you see the other geographies of the world, like China, they are using WeChat, the QR code based, basically WeChat, Alipay, and India, it's UPI, and which has literally digitalized Indian consumers, right? Whether it's from rural or the urban, it's completely different scenario in India. So, I mean, the fun fact is that if we go to India sometimes, and if we do not have UPI, even like small vendors, they are like, oh God, from where are you coming?
Right. It's harder to pay, right?
Yeah, it's harder to pay. So let's talk a little bit about the advantages and disadvantages of having a main mode of payment as your card and the QR code payment.
And I think, again, it's the market itself are very different, right? Like US today has almost 4,000 plus banks registered in US today. It used to be even more, and the consolidation keeps on happening. And because there are so many different banks, the saturation of bank account is very high. And along with it comes a saturation of credit card, right? Everyone has multiple credit cards. You segment your spend across them because you're probably a rewards junkie, right? You want to get airline points or you want to get cash back.
Right.
So the embedded behavior in US is that you have a card and you use it, even though you don't revolve on it. You pay it off every month, but you use it to get as many points as you can on it. When you go to India, that market was underbanked or unbanked, right? People were still, there was an underbelly of cash, right? Regardless if it's gray money or black money, there was a lot of cash in circulation. So that regulatory framework wants to move towards digital payments to get rid of that underbelly of cash, right? They want to bring everyone into the fold. And because they were not bank accounts, they didn't have debit cards. The infrastructure for debit card was not there. Like the certainty of power wasn't there. The telecom infrastructure wasn't there.
Yeah, even the bank accounts were not there for
Right.
people. Yeah.
So it made it easier to say, let's have a digital wallet on a mobile device. And now you can do wallet to wallet transactions, right? Paytm, Pago, all these other things kind of thing. But they're pseudo bank accounts at this point, right?
Yeah.
You just hold money in them and you pay each other. And that because the ubiquity of acceptance is so much that you don't have to need a real bank account.
Right.
And you never had one, and there's no concept. And those micro merchants are not paying anything for acceptance. Right.
Yeah.
So their cost of acceptance is low. So their hurdle to accepting, Paytm or anything on UPI or Bharat QR is like, oh, it's like cash. And because they can use it to go buy what they need to buy, it's a bank account to them for all practical purposes. Here, we're used to a lot more banking products. We're used to rewards. So US, with open banking coming and RTP, if you marry the two together, we'll start seeing a lot more options to say pay by bank, right, at the checkout.
Yeah.
But how does that merchant sway me from not getting my Amex points or my United Airline miles points to now pay with a bank account and in real time, right? Because I get 21 days to pay whatever I charge on my credit card. Secondly, we have the zero liability concept on credit cards, right? So you're not liable if there's a fraudulent transaction. Here, if you now move to pay by bank, you're stuck with Reg E. Like you need to report you don't have the same level of buyer protection that you have with a credit card. So changing that consumer behavior that has been in place since such long time is much harder to move that market versus a market that never had it. Like they don't know a better way, right? They just think this is the only way to do it. So I think the interesting thing about the WeChat thing you said is like Chinese have gone even further, right? They've gotten to the super app concept where they've contextualized everything into that WeChat. So, US, everything, you want Uber, it's separate. Like, even though we've seen people like Marriott trying to bring a Uber request into their app, we haven't adopted a single app that does everything for us.
So I think it's starting up, right?
So people are embedding more and more things into their app, but it hasn't become as contextual as WeChat has become over there. So, but that's an interesting sort of future we'll evolve towards, is who becomes that one winner that you use for messaging, for calling your Uber, calling your food.
Do you have the names of any giants who have started doing this?
Oh yeah, I mean, Meta is already headed towards that, right? They've embedded payments in WhatsApp. They're in the, we know Elon wants to sort of do it with Twitter's next version. Twitter is now getting payments involved inside of it. But those are the right apps. Like if you're having a conversation, right? Even if you sell something, like casually you sell on Offer Now or whatever, Offer Up, whatever that app is, why do you need to leave that app to make the transaction happen? Because now you're paying in the Cash App or PayPal or Venmo. So the ability to bring the conversation or the transaction and closing it with payments, it obviously makes sense that you'll have that embedding of payments going on. And that's where like all these banking as a service, embedded payments are headed. It's just, can we move people away from credit cards to do it to bank accounts? So two separate things, like the embedded fees and then what's the payment method inside of it.
Yeah, I think people really want the seamless way now. So if this embedded finance will actually start booming up, I am pretty sure people will definitely like it.
Right.
Yeah. And let's talk a little bit about the real-time payments, right? FedNow, we know that it was launched in 2023. And you have given a little bit of insights on the cultural government factors of different countries, and we shouldn't compare with different countries, right?
Right.
Yeah. So still we see that this FedNow, the adoption rate is pretty slow. And again, I shouldn't compare, but I'm going to compare with Brazil, right? They have PIX as the RTP. And the interesting fact is that 75% of people already started using or were engaged with PIX after the 2 years launch of PIX. So what do you think is going to happen with Fed now? Is it something people will adopt, or it's going to be slow and still you'll see the dominance of the payment cards?
Yeah, I think payment cards are still secondary to ACH and checks, right? The ultimately you want to get cash and check out of the system. So electronically, most people still do bill pay on ACH, right? So you Pix, again, market driven, right?
Yeah.
Their banking system wasn't as robust, and if you go back to UPI in India, before that came around, there was no electronic way to pay bills online,
Right.
right? So you just had this
The
shift,
backing. Yeah.
right? Totally,
Backing.
it's not just evolutionary, it's revolutionary, because they didn't just take something and change it. They brought in something completely new, and in our case, we don't have that problem. Like, I sign up for bill pay, I give my account number, or they debit my account, and it works, right? I think where FedNow and RTP is going to see more adoption, and we'll see faster adoption, is B2B, where you have a cash flow issue. Like, you don't want to pay someone 3 days early just to make sure you make your due date if you don't have to, right? So you'll do real-time payments in that scenario, so you can hold on to your cash as long as you can and then make it happen within 10 minutes. The curve on FedNow adoption is pretty high, right? And it's going hockey stick just because it's starting from a low number. But TCH, or the clearinghouse, which is the RTP solution, has been around much longer. They almost have, if from a relative ubiquity perspective, they say they have 99% of transactions that you want to do happen in RTP.
Yeah.
So the sender and the recipient banks are both participating. FedNow is slowly getting to that type of ubiquity, and I think there's players in the space that are standardizing it with a middleware that will give you both FedNow, ACH, and RTP. So adoption is slow, probably will start with B2B, but it's got a huge potential future there, and I think our numbers and the ticket size keeps on going up too. So, like, people are trusting it more, which is more important, right? That you want to make sure it gets there.
Yeah. So I think for B2B, correctly you mentioned that it's going to take a little bit of time. But if we talk about P2P, we already have Zelle, Venmo, and they are doing good. So it's like instant.
Right? When the money goes from a ledger transfer from my account to your account, it's still sitting in PayPal. It's still sitting in Venmo. It hasn't landed in your bank account where you can now take a debit card or go to the ATM and take cash out. But you have enough ubiquity that you're willing to let money sit in a Venmo account because you know you're going to use it next time, right? So it feels like it's my money, even though you can't take cash out on it, right? So that type of perception matters as well. Is when someone feels like it's sitting in a wallet, that's everyday use wallet, then it feels like real money. Like, you can pay for your next transaction. And a Cash App is much more popular and becoming even more now. And it's going to the point of sale. Right? So Square is letting you pay with Cash App anywhere someone uses Square. So that ubiquity feels even more like you can go to a restaurant, pay with a Cash App, and then I can pay you with a Cash App. So it feels like all my money in Cash App is real money. I don't need to withdraw it into a bank account every time.
And I think that kind of confidence will come slowly to the consumers as they start building.
And I think
Yeah.
it's like, how many different places do you keep it? Right? Do you
Yeah.
have a PayPal wallet? Do you have a Venmo
That is
wallet?
another
Do you
way
have
to
a
think.
Cash app? Right?
Mhm.
So until we have like one clear winner, you're going to have your accounts in multiple places, some money sitting in all these places. But at the end of the day, your rainy day fund is probably going to sit in a bank account. You're not going to trust that to a Cash App or Venmo. But, with Square now being a bank, getting a lender's license, right? And now bringing lending inside a Cash App, these guys who used to be just wallets are now moving towards offering more and more services and embedding them in a way that you don't even feel like you're leaving it. It's not a standalone experience to apply for a loan in Cash App anymore. Quicken is doing that on the B2B side, or Intuit is doing that in the B2B side, where invoice payments and having a checking account and getting interest on checking account is just second nature, and you don't feel like it's a standalone experience and a different website. So that embedding finance thing is
going to
future.
go massive in the
Yeah.
future. That is what your prediction. So yeah, let's talk. I mean, I have a couple of more thoughts coming into my mind. So I was reading about FedNow as well. So big giant players like Shopify and Walmart, even they are kind of hesitant to integrate, FedNow. So do you think that
From a consumer payments perspective, yeah. I mean, I think those guys, well, Walmart especially has a direct connect into the networks, right? So they're not paying the same that a small guy pays for accepting credit cards.
Yeah.
Their cost of acceptance is very low. And what you have is certainty that who paid with the card, there's an action, you have liability shift. With FedNow, we haven't seen the rule structure that's any better than an EFT or electronic funds transfer. So for merchants to say, yeah, I want to lower my cost of acceptance, I'll take FedNow because it's real time, but then have that chargeback or refund or 60-day window to charge things back, right? So the regulatory framework needs to change to make it into a point of sale transaction type. And the experience today is and maybe, that's where we go, where QR becomes the front end to a FedNow transaction.
Yeah.
Right now, you need to give your account and other information, which you're not going to type at a point of sale.
Yeah, it's too much for anyone to do that.
Yeah, but I mean, we've seen this like with Target, right? I don't. If you shop at Target, you have the red card.
Yes.
Whereas a decoupled debit card, so they give you 5% off for using their card. So if that type of incentivization happened, where Walmart gives you a card to use that experience that you're used to, but then they use FedNow to debit in real time, that could be the way to drive it forward. So we're still sort of waiting to see how these real-time rails translate into point-of-sale transactions and where the liability shift and the buyer protection comes in.
Yeah, I think it's just the start. So a lot of innovations have to be done. So 2023, if I would say, it's just hardly 2 years. It has been launched. So let's also talk about buy now, pay later mode of payment, right? And we have seen that the actual consumers, like 60-70% consumers, are today's generation of millennials or Gen
Z's.
Yeah, so they are mostly into it. So from your point, I would like to understand that, do you think this method of payment is really robust, or it's going to be set like a kind of niche product and might not go ahead?
Yeah, but I think for certain segments, it meets a need, right? And it's same like you were talking about Brazil with Pix. Brazil for the longest time has been a market where almost every transaction in every face-to-face environment was an installment-based transaction. So you bought groceries and you divided it up into 4 transactions, right? And you paid. So if there's a segment of the population that is cash crunch is their issue, and they don't trust credit, or they don't have credit, or their credit is, not that great, then this is a good way to divide it up with 0 interest over 4 transactions. So I'm sure it will exist, right? the interface is what's hurdle for me. Like if I can put it on my card, like Chase and Amex and others give you the option to use the card at the point of sale, and then on the app or in the website, break it up into 4 transactions.
Oh.
So you can plan out, how you break it up.
So I have never tried this method of payment. So you're saying that even Amex and all of these banking
Issuers already do that.
they are doing it, right? It's not something new company like
Klarna, yeah, Afterpay, like they started that trend, right?
yeah,
And
but
there's
the core
but
companies are also integrating this.
yeah.
That will make more sense, right? Because people are more confident on the banking system.
But you got to remember we're reward junkies, right? So if I can buy that TV for 2,000, get the rewards for it, and then divide it into 4 payments of 500, using the same card, having the same zero liability, and plan out as my direct deposit comes every 2 weeks, they take 500 and I pay 0 interest on it, right? Not the 17, 18, 21% interest that credit cards do. That behavior is an embedded behavior. I don't need to change it. With Klarna or Afterpay or Affirm, there's a different experience. And the other thing is they started online, right? So to apply for buy now, pay later online is easy, right? But at a point of sale, how do you apply for that right then and there? And like, how do you, it slows down your throughput for the merchant, right? You just want to push people through.
Yeah, I think that is why it is more with the youth right now, those who are doing online shopping a lot. And do you see any regulatory framework behind this, or it is on kind of
CFPB's already been clamping down on some of this. Is like credit worthiness is an issue, right? How many of these installments can you open? Because when a bank gives you a credit card, they have to look at your income and say,
exactly,
are you credit worthy, right? How much do you have from your, they were not reporting to bureaus, so you didn't know how much was already outstanding on them. So CFPB's been looking at that side already, but I think it's for this generation, I mean, not a generational thing, because there are a lot of people who have that cash problem and they want to divide things up. So it's a good product. It's worked in Brazil and in other countries. It's probably going to be around. It's just, we live in a bubble, right? So if you don't have that problem, you feel like, why would I split this? I can just pay it off.
I mean, yeah, definitely. It's really good for those who need it. But the point of concern right now is companies like Affirm, Afterpay, if they do not have the background check or credit check kind of mechanism. So the frauds can happen and then they can go in loss. So
they've seen those numbers where they've lost a lot because they were not doing anything. And I think they're sort of, as they mature, they're maturing their procedures on how they're doing credit checks. And they're starting to report to bureaus so the rest of the industry knows how much is outstanding on any given person.
Let's talk about the frauds, because the more we are moving towards automation and AI, right, the frauds are also increasing in that way. So what are some of the key initiatives taken by the payment side of this industry to control the fraud?
Yeah, I mean, fraud has been from the first drop. Yeah, from the first drop in Fresno, fraud's been an issue, right? From an AI perspective, like neural networks have been part of the payments transaction network for some time, right? We've been able to say this card was used in LA 3 minutes ago. It should not be used in San Francisco now because that card can't travel, right? So knowing the geolocation, knowing the parameters of that card, there's a lot of AI already at play, right? They were AI in the sense that you didn't call it AI, but it was based on a lot of data modeling that were already there. But the new fraud that's sort of popping up is these identities that are being created, right? And AI creates a person, you can't differentiate if it's real or not because that, so it's becoming more and more important to use other tools rather than just what's coming in the transaction. Like if it's an online transaction, knowing the age of that email, like was it created 5 minutes ago or has this email existed for 7 years, right? Where are they shipping? Have we shipped to that address before? So bringing all of these pieces of data and together and then scoring a transaction based on that, like companies like FeedZai are doing an awesome job at that and figuring out, like, both on the issuing side, on the acquiring side, to help solve for that problem. The fraudsters are smart because they start targeting the older segment with Zelle or Venmo and other things, which they're not as familiar with, right? So that type of attack to educate someone that this link is not real, you should not be clicking on it. Banks are spending a lot of money and energy on that fraud prevention.
Yeah.
But on behind the scenes, shutting that off takes a lot of effort. So
Absolutely. And you're right that even the consumers should be aware of it. But right now, the AI is progressing so massively. Every day there is a change, there is a new innovation. So it's even difficult for anyone to, keep a track of it and then understand. But yeah, everybody should be aware of it and try to prevent these frauds. So do you think that the companies, I'm pretty sure the companies like PayPal and the big giant companies, right, banking and fintech companies, so they might still be on the traditional systems, right? So for getting any automation or AI generated or for any initiative, what kind of energy they have to put on?
I remember from way back then at PayPal, even though you would delete an account number, we never deleted an account number. We just put it in a different system because next time someone stole your credit card and tried to enroll it in PayPal, we knew that last time this account number was attached to this email address, this shipping address. So the data and the fintechs are better at this, right? Because they have that data strategy in place to have a holistic view, right? Banks on the other side, and especially the smaller banks, don't have it on their core systems because they rely a lot more on FIS and Fiserv and the traditional sort of fintechs, right? The technology companies. But I think in payments, that issue is not there. Like we've been pretty, even though the fraud number sounds huge from a basis point perspective, fraud's very manageable. Right, Visa, MasterCard have done a great job of advanced analytics and their scoring systems to be able to stand in and decline a transaction when they know it's not a real transaction. It's going to become more of an issue when they're simulating that they're, Jess, and they're sending me a request, right? And it's happening on that type of Venmo, Zelle. It's going to now transition to RTP.
Yeah.
And being able to sort of figure out if this is a request for payment from a trusted source or not is going to be an issue in that environment.
And like how you mentioned, you have close to 30 years of experience in payment and you have been a part of these giants like Visa, JP Morgan Chase, Bank of California, and PayPal. Yeah. So while you were there in the organization, what were the key initiatives taken which really made a remark?
Yeah,
I mean, if you can list down one from each organization or in total three.
Yeah, I think that Visa is sort of the best one, right? Because I've spent a time in innovation there all my career. I've innovated like the contactless payments. I still have the patent on DCVV, right? So how we enable that, because it's chicken and egg thing, right? Like you need the infrastructure to tap the card, but you also need new cards, and new cards were costing more than the old cards. So building it in a way that you can deploy cards without having to switch out every terminal in the market, we came up with the way to embed a dynamic value inside of the MaxDrive transaction. So, and that's sort of a core thing, right? Even though we're now doing tapping, like the payment system has always been designed that you still have cards that allow for the knuckle busters, the zip zap machines.
Yes.
Right. So if your infrastructure goes down, you should still be able to make a transaction happen. So we're slowly developing that. And I think Visa, we did IoT payments, right? So we're pretty not far away from your car pulling into a gas pump, saying your pump number 6 and having your car turn the pump on.
Oh.
Right. So we have this in the Chevron app. We have this in the Shell app. But that app getting embedded into the head unit of the car is sort of the next step, right? So you pull in, the geolocation says, I know you're at Chevron, you're at pump number 6 because BLE tells me you're at pump number 6, and you authorize the transaction. And the pump turns on. No cards, no tapping, and it's all digital, right? So we've tried that POC concepts because the pumps have gone to where each individual pump has a unique resource identifier, API that connects to it. So we're sort of seeing more and more of these examples of things that used to be far-fetched, and now they're like everyday experiences like that. So I think that's what I'm excited about. Next one is like the one POC we built was on blockchain, right? Like today, your car has a huge exhaust of data coming from it, right? From videos that it's recording and sending to the manufacturer, to telematics data and everything else. If that data is now put on the blockchain, like what can you do with it? It's like the car manufacturer and the dealers that exist want you to bring the car for them to service. But if that was publicly permission-based, obviously, available on the blockchain, could Jiffy Lube send you an offer knowing that your car needs an oil change, right? So can we make that type of permission-based data available out there? And that's sort of the where does, how do you monetize this telematic data that's out there? So there's, I think payments, like there's a word saying that payments is eating the world, or software is eating the world, but payments is taking a bite. And every transaction in our life ends with somehow you're paying for it.
Yeah.
And if we can marry that into the transaction, it becomes seamless, right? Like the Uber experience, right?
Yeah.
Everyone talks about Uberization of this, Uberization of that. And all that happened is we removed the payment experience out of it. Like just walk out and you're done. Not having to haggle over $20 bill and not having a change.
So
Right?
comfortable, right?
Right.
Yeah.
There's lots of these sort of embedded type transactions that we're going to see in our future, right? That it'd be like paying with watches has become real. So voice is next, right? So you can talk to Alexa and say, order me this. And now you marry that with the AI piece. The shift happens, right? If you were on Amazon yourself, you would look at reviews, you would look at the brand, all these things. But if you just told Alexa to buy you AAA batteries, it's going to probably send you Amazon Basics, right? Because it's their brand. That's where the profitability for them is, right? So you have to say, give me Panasonic AAA batteries or lithium AAA batteries. So you have to figure out, how do you use AI and this embedded to work in your favor, not in the merchant's favor.
Right. I think, the future is pretty interesting. So looking into all of these and hearing of all of these use cases excites, right? It excites, definitely.
Even with Bank of California, like when we launched the corporate card, it was, most small banks don't launch their own cards, right? They just outsource the business, take a percentage of revenue. But our objective was to have our own branding, to be able to get that, fee income into the bank and launch a branded product that competed with a Brex or a Ramp. Everything from the quality of a metal card, having the ability to get a text message every time you use the card, and then have an expense management system that you can send a receipt to do the workflow for you. So as technology is not a true differentiator anymore because the cost of technology keeps on going down. It's, can you build a branded experience that makes your brand contextual in everyday use, right? So the deeper your relationship with your brand is, because every time you swipe it, you get a text message. It reminds you it's Bank of California, we're looking out for you. You sort of start having a deeper understanding of it, rather than the old school way. You swipe the card, 25 days later, you get a statement. Now you go and reconcile that statement with your expense system.
By the time you do not even remember.
Right? So, yeah, I mean, I think we're long ways from banking sort of changing its ways. Like, I still wonder why a statement is chronologically listed. I don't live my day, or I don't remember things in my day by dates, right? So why don't we take and club all my transactions for a trip together. Like when you were in DC, here's all your transactions, right? Or here's all your reoccurrings on top, like your Netflix, your Amazon, and others, right? But it requires a fundamental shift in how banking technology works, and most banks are not there yet.
Pretty interesting. Let's consolidate now and give me top 3 things, or if you have more than top 5, that how is the future of payment is going to look like.
Yeah, I mean, I think on the consumer side, you'll see card numbers starting to disappear, right? You'll just have a relationship card, where it could be debit, it could be credit, it could be buy now, pay, split in 4.
The transaction will happen through the tokenization.
Yeah, so you'll just use a token. That token has rules behind it or AI behind it that says now it's a debit, it's a credit, or I want to split it in 4, rather than a differentiated brand or experience for it. Contextualization of payments, I think, will continue to happen. We'll see a lot more voice commerce, card commerce, connected commerce together, right? And I think on the B2B side, RTP and or RTP collectively, right? FedNow and RTP together will change how accounts payable and accounts receivable works, right? The net 30, net 60 transactions will become a lot more seamless. And lastly, I think stablecoins or distributed ledger as a whole will have a huge impact on how remittances work, right? We pay a lot in cross-border fees, in exchange rates, and with moving that out and just having transfer of value through a distributed ledger or stablecoin will bring that cost down in the favor of the consumer and make it much faster. But I think ultimately, the idea that it's a dollar-to-dollar pegged transaction, it makes it much more viable than just Bitcoin by itself. So I think it remains to be seen, like, does Bitcoin win in that B2B thing, or do we end up more with stable coins, which are better regulated and price is more stable?
Yeah, I think that's going to be super exciting, and that brings us to an end. Thank you so much, Jagdeep. Thanks a lot for taking out time and providing such insights, and I'm pretty sure our viewers are going to love it. Absolutely.
Thank you. Appreciate that.